All right, good morning, everybody. Hopefully, y'all had a good holiday. Short week. There's still a lot on the table, even in this short week. Not a lot of econ today, and not very many speakers. Keep your eye on natural gas and energy. It's a lot going on over on that side of the fence. There is a Bank of England speaker at 12:30. Other than that, we've got additional auctions and durable goods, factory orders. Any little bit of news right now is being heavily parsed to kind of see, is good news bad news, or is bad news and good news? I know that might sound kind of funny, but there's times where the market wants to see bad news because of their anticipation of how that bad news would help the Feds make a decision. All right, so there are times where the market wants to see bad news, and there's times where the market wants to see good news. So we don't have that answer at the moment. Is bad news, or is bad news good news? It's a light day. We don't really have a lot to focus on for that answer. Just keep your eye on natural gas and oil this morning. All right, as we usually do, we go to Market Watch calendar. You can see factory orders at 10. Those additional auctions at 11 and 11:30 today. It's important to recognize these. They just don't get enough attention. Everybody looks at like the job numbers and unemployment, things like that. But these additional auctions are very often how I catch those midday reversals, V bottoms, or rounded reversals off the highs of the day. Just by watching the clock and recognizing, it's 11, we got these additional auctions, we have the capacity or the potential today to see a significant change in market structure or market sentiment. Ford is scheduled to post their June sales numbers today. So a little bit of news that I had also picked up on today. I think I got that from Bloomberg. Either way, if it wasn't Bloomberg, then it was Morning Brew. Whenever a company reports their numbers, right, whatever their numbers may be, say like Netflix, it's subscriber numbers; for Ford, it's sales or production, right? There's always a widget and there's always a number. If you are wanting to play off of this, you would first want to find what Ford's estimates were and then see what their numbers are when the numbers come out, right? The numbers coming out without you having some expectation of what were they supposed to be, then you won't really have any idea of what are you supposed to do with the numbers when they come out. Are they good? Are they bad? Are they high? Are they low? So get that expectation by first finding where their numbers were supposed to land in the first place. All right, so we're looking at the S&P. I think it's worth coming out to a daily chart for a moment and kind of asking that question, how far away from the 10 are we? We are not very far away from the 10 at all. In fact, we're just barely below the 10-period daily moving average. What that basically means is we have the capacity or the potential to make a really big move, and we would not be, quote, overextended. We wouldn't be oversold. We wouldn't be overbought. From this location, we're basically right in the center of the basketball court. We could make a directional play either way and not be overextended. It did help that we had multiple days in a row of consolidation. It's worth noting while we're here, just go ahead and take a look. How far away are we from the 10-week moving average? The 10-week is very similar to a daily 50, right? They're not spot on perfect, but if you're on a daily chart looking at the 50, it's very similar to looking at the weekly chart with a 10. We're 3.75% away from the 10-week moving average underneath it, obviously. Um, Looking at this, it confirms what we were already looking at on the daily, that this market right now has the capacity to make a very big move, and it would not be extreme or overextended or in any way hitting the edges of that least squared methods or linear regression or mean reversion or anything like that, right? We're in the middle of the court. This is the linear regression line. You can see the swing highs and the swing lows had been relatively consistent. And then we kind of got tangled up here a little bit. It's not the first time, right? We got tangled up back here. We failed to get that next swing. So we came up, failed, set a new low, and then had this nice basing pattern. Had a nice basing pattern down here. Topping pattern, basing pattern, consolidation pattern. In that run up, there was a lot of expectations that perhaps we were going to get into 400, into 4,100, maybe even to 4,200, and instead it just straight stalled out before even getting to 4,000. So in that stall out, and now in the drop back down, recognize at this point that we did get a higher low. Yay! Right, so we still have a lower high, but we did get a higher low, and that's a start, right? It's a step in the right direction. So that low needs to hold. That becomes a critical low that is a bit like a line in the sand, right? So we're talking 37.41. It really needs to hold. We got to keep this higher low or else. And you love that kind of drama or else. All right, so for today, just kind of back up a little bit. The range is still pretty clear. You can see from that 3,700 zone, maybe 3,640-ish. So we get the lower end of this range, and 4,200 would be the upper end of the range. Takes us back into like May. Right now, 39.28 is the ADR high. That's the full ADR high. And 37.28 is the full ADR low. So we're looking at a 200-point move in today's ADR if we're, for a full move on either way, right? Take that ADR. You can see we have 2.62% ADR right now. It's basically $100. So from the Globex, move $100 one way, that put us at 38.28. Excuse me, 39.28. Move $100 the other way, it'd be 37.28. Now, if you're hearing those numbers and you're thinking that perhaps I'm reaching, I'm overextending, or getting in front of my skis, or however you want to say it, the average daily range is not some hypothetical number. It's looking at, hey, what did we do for the last 21 days? What has been the average range from the highest point to the lowest point for the last 21 days? And right now, that's been about $100. So from where we opened in the Globex last night, we very easily could make a $100 move, right, or a 100-point move. So I'm not reaching. It's what fits. In fact, this number is what we would consider normal. So if things were to become a little violent today, whether that's positive or negative. If we were to move beyond the norm, then we could very easily get an ATR plus another 50% of that ATR, right? So it'd be a $150 move instead of a $100 move. As I often talk about when it comes to holiday, you really want to discount all of Monday. And I know charting wise, that seems very odd, right? But just kind of approach it from the idea that we've been in Globex since Sunday night, right? It's kind of approach it from that point of view. And if you do that, it will really help you out, especially with a lot of the charting platforms that won't chart Monday for you correctly, right? So, with that in mind, we really want to focus on Friday's levels. Where's the RTH high or the absolute high of Friday and the absolute low of Friday? That becomes our true range for the day on the considerations of inside day or no inside day, right? Inside day breakout. So with that in mind, we are inside of Friday's range. We're not testing against the high for a breakout, but we're not testing against the lows for a breakdown either. This is a very wide range from 38.31 ish down to 37.45. That's a significant room to just wander around without really getting anything accomplished. As long as we're holding that low that I had pointed out, that new daily higher low from that daily time frame, as long as we're maintaining that, even if it's just a sideways day, the market's going to consider that a pretty positive outcome. We're down more than 0.5% this morning. And when I bring in the other charts, as you're going to see, this move was uh, across the board in almost every single product that we're going to look at. There was an effect, whether it was from the upside or the downside. So this reverberated through all markets. If we were to get a topside breakout today, the range being the dominant thesis. So we've already discussed the range. If we were to get a topside breakout, we would first need to break back through the cog line at 38.11, the RTH close of Friday, and the high of Friday. I didn't mention our own Globex last night. This would be, because we can see its impact here, it's worth marking the Globex. Now, if we're going to take everything from Friday, this Globex back here would be more appropriate. But Monday night, when the market opened back up, we were moving around, we were doing all these things. We can see where price did respond when it came back to the open from the underside. We buzz beat off the bottom of that Globex. So that alone says we should go ahead and mark it. All right. So that's 38.13, 38.25, 38.33. And then we would work on breaking through our own Globex high at 38.55, 38.57. So plenty of institutional pivots to the upside. Each one a chain or a goalpost or a sign. We get to that one, we start asking the what next question. What's our next target? How likely is it that we're going to reach that target? If we don't reach that target, where we go from there? The base case is still that we're going to have a range day today, right? But now that we've talked about the upside, we've talked about the range, We now want to focus on the downside. There's a lot of negative stuff going on out there. Uh, a lot of analysts have been called out publicly for failing to update and upgrade their forecasts and their expectations. And we've got earnings season less than a month away. You're going to start to see a lot of revisions, a lot of downgrades, a lot of manipulations. Apple, for an example, has a nice little knack in good times that if they don't think they're going to make their earnings, they'll downgrade their earnings to a number that they know they can beat, and then they'll come out for earnings and beat that number. Like, yay, we beat it. So they take the beat down early, and then they get the rally on the other side of it. We're not going to get no rally on the other side of these, but the idea that we could get those downgrades is absolutely on the table. The daily low that I had mentioned would be actually the Globex low from Thursday into Friday at 37.44 and a tick, 2 ticks. So 37.44. So the point of the discussion about watch for this news is you're going to start seeing a lot of this come out. When I first started trading, I would hear a lot of people say that the fundamentals had been thrown out the window and that it was just a buyer's market and that all of those valuations and expectations didn't matter. Everybody would just keep buying and buying and buying and there was always this warning and there was always this sarcasm from these 20 and 30-year traders who'd say, it used to matter. It used to matter if a company had good, strong fundamentals and forward earnings and continuing improvement in their bottom line. And now it doesn't matter, but it will. They kept saying it, right? Heard it for years. It will matter someday. It will matter someday. Well, we're there. We're at that someday. Valuations really do matter right now. Tip ranks is one of those places where you can keep track of analysts by name. They do kind of get a reputation after a while, and not all analyst recommendations are the same, right? If you see, say, for an example, that Ford got an upgrade from hold to buy, and it's Joe Schmo, podunk, nobody, probably not going to want to give that a lot of weight, right? If, on the other hand, it's a renowned JP Morgan analyst who happens to get it right more often than he doesn't and has been known to find valuations that others didn't find, then you probably want to give that more weight, right? But it's hard, especially when you're new, to know, well, which ones should get more weight and which ones shouldn't. I'm not trying to give some commercial for tip ranks, but I like where they're going with it, right? What that company does is they have a line of analysts and they actually keep track of what that analyst puts out and they rank them by their accuracy and their depth, right? That they don't just put out a statement with an upgrade or a downgrade, but it actually has some scope and some depth behind it, explaining why there was an upgrade or a downgrade and why they think it deserves a different rank. You don't need something like tip ranks, right? But it certainly would help if you have something like that. Just be careful with the analysts. Thinkorswim has a nice little news source down at the bottom, and of course, it's free news, so it's not often the most speedy or expedient bit of news, right? But when it comes to valuations and fundamentals, we're talking about swing trading. So, you know, finding out about it at 10 in the morning versus 8 in the morning it's not really going to make that big of a difference, right? Take the free news from that point of view. So for this downside move, if we break the base case and we expand beyond Friday's low, we do have Thursday's low of 37.41. And then below that, we have the full ADR at 37.28. There is a cog line at 37.11. And below that, we really start getting into a couple of Fridays ago, right? We got more of the round number structures, 3,700, 3,650. And at this point, it's usually easier or clearer to just come over and take a look at the volume profile. It's a 10-day, 30-minute volume profile. As you can see, the point of controls around 37.70. We got a value area high at 38.40 and a value area low around 37.30. There is volume resistance over our head at 38.30, right around in that zone. 38.30, 38.20, significant level of resistance. There is another one around 39.11, the cog line, but I mean that's a bit of a stretch from our current location. To the downside, that point of control at 37.70 is going to act a little bit like a speed bump if we were to start moving in that direction. Notice I didn't say a handrail. It's not support. It's not something to lean on. But it may very well be a place where the market would react should we get down to that level. It could, at the very least, slow us down a little bit. That is a significant level of volume support. It will depend on how we approach that, whether it holds any value or not, right? So when we get those really big, expansive candles and we drop down into something like that, we're very often going to deflect off of it, right? Because we create a liquidity vacuum when we drop that far that fast. If, on the other hand, we grind it down to that spot, we're much more likely to continue grinding right through it. So first touch play comes in if we drop like a stone into that zone. I'm a poet and didn't know it. We do have a point of control to carry forward from Friday. That would be around 37.80. I'm going to get that cleaned up here soon in a little. $37.82. So that's an untouched point of control. It's called a virgin point of control. The expectation is that if we get there, we're very likely going to see a reaction from the market. As I've mentioned before, you can also carry forward the value area low and the value area high. I don't normally do that. It's just not, I don't care to do it. But if you study volume profile, it's something that is mentioned frequently. It's definitely encouraged. The idea behind it isn't like it's some definitive line in the sand that says, oh, well, when we get there, we're going to stop. Nobody's implying such a thing, right? But there very well could be a reaction at that level, and it could become a significant turning point. Also, if you notice Friday, that value area low happens to also be the RTH low. Now that RTH low, I would mark because that lines up with what I like to focus on: open, high, low, close, institutional pivot points. So I would end up at a line at that same spot as the person who marked that value area low. We would have just got there from two different approaches, right? And that's confluence. You really want to find ways that your technical analysis overlaps, right? If you get to the same number, but you got there from two different directions, then you know you're kind of avoiding that multi-collinearity echo chamber self-fulfilling prophecy stuff, right? That you're not just overly convincing yourself that you're right based on one bit of information, right? All right, so we're getting a little bit of a liquidation break in the S&P and the NASDAQ. The H pattern failed. We are now in full-on trend mode on the 15-minute time frame at least. VIX is expanding to the upside just slightly, still stuck underneath that 28.30. The dollar, nice expansion last night. This is obviously a part of what I had mentioned this morning when I said when we get to the other charts, we'll see that it was a reverberation across all markets. When that dollar took off like that, it impacted everything. And it's not done. So we want to definitely keep your eye on, say, gold. It's not really moving around this morning the way we would have anticipated. The expectation was that it would be moving opposite of the S&P and the NASDAQ this morning, and that's not what we're seeing. So a little bit of the old acronym, when what should happen doesn't, right? And right now we're seeing things, it shouldn't move like this. Gold should be moving in the other direction. It's not. We do have confirmation within Bitcoin. Again, we don't use Bitcoin for a correlated market state or an inverse market state. We instead use Bitcoin as a gauge of money around the world, right? When money is risk on around the world, we'll see them bidding up into Bitcoin. And when they're risk off, they're feeling the fear, we won't see that, right? We'll see them actually liquidating more of their holdings there because this is pure risk right here. Right? It's like the purest form of risk right now. Sharp reversal in the bonds on this liquidation break. This is really important to recognize because in the last month or so, we've had multiple occasions where every single market moved in the same direction. Literally, oil, bonds, stock, gold, everything all doing the same thing all at once. More of that when what should happen doesn't kind of behavior, right? But in this case, this morning, we're getting this liquidation in the stocks or in the stock futures, be more precise, while we're getting an absolute opposite in the bonds, the way it's supposed to be. So it's nice to see that, they can actually do what they're supposed to do once in a while. Remember, bonds go up, yields go down, or rates go down, right? It did manage a nice bounce on that VWAP, but at this point, it really has no bearing on the VWAP bounce at all. It's just a pure reaction play to the rest of these markets. Keep your eye on the VIX. It really looked like we were going to slip into backwardation last week. We didn't, just barely. It depends on the time frame that you want to use for that. But we want to continue to keep our eye on this, see if we're going to slip into it this morning. Remember that it's a short week in a new month. We've got earnings literally right around the corner. We got all these analysts about to really pile on in their negativity because they got called out for their flat-footed complacency and they just haven't been doing their job. And now they're just like any employee, when you catch them screwing around, not doing what they're supposed to do, now they're going to get overly zealous and try to put out a little bit extra. Just watch for that zealotness. The cyan line, although I know it's probably difficult to see with all the clutter that is on my charts, 3805 in the ES, that is the 4-period daily moving average, and we just broke back down below it. In the NASDAQ, zoom in enough to where I can get the number, 11,575, 4-period daily moving average. We were already underneath it, kind of buzz beat off the bottom and continued to go. Oil looks like it's going to come back above it. That 4-period daily moving average, consider it like a surge indicator, right? When we cross through it, it's like stomping your foot down on the gas pedal. Right? You get that initial whiplash and surge forward. It's a surge indicator. All of your moving averages can really be trimmed out and lined up into different categories, usually in a pairing group, right? You've got your higher time frame trend, and then your momentum, then your surge. There was the argument or the expectation that we would that we wanted to see the dollar maintain below 105. And if the dollar got back above 105, that we would consider that to be bearish. Still have the note on my chart here. Above the 105 is bearish, right? Again, I know it's a lot of clutter, a lot of trash on that chart, but the dollar obviously is back above the 105. If it quits advancing to the upside and just pauses, stops, maybe begins to consolidate in a nice little flag pattern, uh, that would take a lot of pressure off the market. What we really don't want to see it do is drop back down really fast. We need it, or we want to see it go back down, but not in extreme ways, right? That extreme move to the upside was bad enough. We don't want to see that flipped over and have an extreme move on the way back down. So really want to keep your eye on this thing. If it starts to roll over and start moving to the downside, pay particular attention to this pace and the speed and the scope of the move. Um, Probably for another 10 minutes, secret. I start at 7:30 and I generally wrap up around 8:15 at the most. Once we're done with futures, we take a look at equities, maybe get some scope and breadth on a couple of names worth checking out, and then we wrap it up, and that's it for me. Boom, boom, boom. It looks like somebody asked what's going on. There is demands unrelated to the nuclear deal for Iran, and that with the Norwegian Oil and Gas Association escalation of strike to cut 50% of Norway's gas. Not not much more beyond that, and I mean, isn't that enough though? Oftentimes, nothing is showing up on the news. If you look at finance juice, other than this added demands unrelated to the nuclear deal, other than that, there's that. U.S. and its allies are alarmed by the progress Iran has made in its nuclear enrichment process. I guess that would be a little bit of that would cause you to pucker a little bit. This is finance juice, and it's free. I am signed in, but I'm signed in under a free account. I didn't pay for it. It's absolutely amazing tool, and it's not to the second fast, right? If you were to buy a news source, you'd probably get at least 1 or 2 minutes faster, but it's pretty darn fast for a free one. And it does a really great job of lining up all of your things that you would need on a day-to-day basis, including market wrap from around the world, who's speaking today, yada, yada, yada. It's worth going and looking at. So if you haven't been using Finance Juice, maybe want to add it to your list of tools. All right, so we're looking at a significant move in the markets right now because of what's happened. The markets news always trumps whatever we can perform, with technical analysis. Keep in mind, if the S&P and the NASDAQ are going to be negative today and you still want to trade long, there's always something out there, right? It could be commodities, energy market, the marijuana market. there's always something, right? If that's your scope, because a lot of people don't want to trade options, they want to trade shares of something. There are also inverse ETFs for those of you who perhaps are in an account that doesn't have options privileges, or if you, again, just aren't really comfortable trading options, there's plenty of ETFs that will allow you to trade in whatever direction you want. So you can go short without having to go out and borrow shares of stock, right? And pay that borrowing costs. For the rest of us who tends to trade just whatever happens to come along, keep your eye on XLF, KRE, your regional banks, your financial institutions. Remember that the S&P has financials in it and the NASDAQ 100 does not have financials in it. Natural gas, as I've mentioned multiple times this morning, we had some really significant moves in here. And you want to continue to keep your eye on it, especially when it comes to the news behind it. We started to get a red to green in that Bitcoin ETF BITO, although now it's starting to look a bit like an island reversal. Chips have been in the spotlight for a little over a week, and there's no expectation that they are done yet. I got to get off of this white. This thing is driving me nuts. I didn't do any good. That'll do it. My goodness, that was just too bright. All right, the Q's down one and more than 1.25. IWM more than 1.25. Marijuana is down, but it looks like we're getting that reversal a little bit this morning. Like I said, inverse markets. Focus on whatever we got, right? Keep your eye on those financials, the XLF. I started to talk about chips, so let's bring those back over again. They've been in a hot seat. It's been a it's been an ongoing focus, and I don't think they're done yet. Last analyst expectation that I heard on chips is that there's still a lot of meat on the bone for those looking to go short. Keep in mind that a lot of those chip names are also in our crypto list, right? That we got from the Smalls Exchange with their crypto futures product. We opened it up, looked at what was in the basket, took those names out, and a lot of those names are these same chip names. They're all, excuse me, they're all mostly presenting with a head and shoulders pattern at the lows of a range. It's not normally where we would want to see a head and shoulders pattern, right? Normally we'd want to see that at the top of the range, indicating a nice reversal after a good move to the upside. When we've had a good move to the downside like this is generally where we would want to see an inverse head and shoulders, showing a reversal off of the lows and a break for a move back up. Seeing a head and shoulders at the low, when a head and shoulders is supposed to be a reversal at the lows, it would be a continuation signal. I'm not really comfortable using a head and shoulders as a continuation pattern. So I'll point it out, I'll note it, recognize it, even map out, what it could give us for our targets. But I still find it very uncomfortable to lean into using just that for an evaluation for a continuation lower. The idea behind it, just like with regular head and shoulders, that a break of the neckline is your trigger for your entry, and that you measure from the head to whatever shoulder happened to be the lower one, and then you plot that same distance to the downside, and that gives you your target. A lot of analysts will tell you to mark your 50% spot, and that way you have a target 1, target 2, right? Half the distance and then the full distance. Another thing about a head and shoulders that I'm really uncomfortable with is shorting from the low, right? You're supposed to wait for it to break the neckline and then you participate in the move to the downside. I don't like to sell the lows. I'm much more comfortable getting in across those highs, right? Of course, when you do that, very often you don't have the confirmation that you need, but it's the smaller risk trade, right? Or the lower risk trade with a higher payout probability. Either way, we got our neckline break on NVIDIA and a lot of the other names. Some of them didn't have a full head and shoulders plotted or printed, but we are getting that continuation across the board in the entire sector. Just something to kind of keep your eye on. With the move that we've been seeing this morning in the last 30 minutes, I want to point out the idea that the plunge protection team is an actual real thing and that we absolutely could see them come out today. They won't show up on Finance Juice because it will be unannounced speakers, but look for anybody from the Fed to start showing up. The last unannounced Fed speaker that we saw was on Fox Business. I don't watch Fox Business, but it did show up in FX Street once he started talking. So be on the lookout for any Fed speaker that starts to show up in the FX Street, or not FX Street, in Finance Juice. It'll just, it'll start showing like this person said it, and it'll be 4, 5, 6, 7 posts in a row of this one speaker saying the same, watch for them this morning. I'm really anticipating some form of PPT out this morning. That's what I got for you, everybody. Be careful, be safe. We're supposed to do an optional mega live stream this afternoon, but with the new schedule that we are putting together at the Bullish Bears, there will not be one this afternoon. And besides that, with the holiday week, first day back, got a lot of things to do. We'll not be doing the back testing this afternoon.